because when I press the button, it does not come on right now.
I am not the host of the meeting.
It's done. It's
Right.
done. The access has given.
Okay. Renata, you can turn on your video now.
You can start.
All right, okay. Panelists, can you please turn off your video cameras? We're about to begin the session. Rotaract Tyagaraja,
Hi.
could you turn off your video camera? Thank you. All right. Hello and a very good evening to everyone joining us live on Facebook. Welcome to Wall Street Conundrum, a conversation about financial literacy and how we as the youth should manage ourselves in the future with regards to some very paramount information that we as responsible citizens should know. This panel discussion is organized by the Rotaract Club of Colombo East, and the Intra Club of St. Peter's College. A brief introduction on the two organizing committees. Of course, the Rotaract Club of Colombo East is the premier Rotaract club in the country, chartered in 1989, has built a reputation of finesse and articulated action as a youth-led social service and self-actualization platform par excellence. The Intra Club of St. Peter's College is one of the premier Intra clubs in the country as well, chartered in 1990 with a rich heritage of service and dedication to excellence, endued with a commitment to values of virtue, truth, and molding and the molding of upstanding gentlemen for the future of Sri Lanka. We have a conversation that is quite technical this evening, so I request all our viewers to pay very close attention to the three exceptional panelists we have joining us this evening to talk about financial literacy. Without any further ado, I'm just going to go into the introduction of our three exceptional panelists. First of all, Rotarian past President Rajendra Tyagaraja. Currently serves as a non-executive director in diverse portfolio of listed and unlisted companies, including multinational corporations. He is an alumnus of PricewaterhouseCoopers and a fellow member of CA Sri Lanka as well as SIM UK. He obtained his MBA from Cranfield School of Business UK and had a highly successful career in banking both in the United Kingdom and Sri Lanka. During a 36-year career, Tyagaraja spent the last 16 years as a CEO of 3 private sector licensed commercial banks in Sri Lanka and had the opportunity of contributing significantly towards policy advocacy issues such as corporate government framework for banks, Basel III adoption and fair value accounting by banks, financial inclusion and more recently development of fintech sandbox framework for banks. During his period, he chaired the Sri Lanka Banks Association, the Asia Banks Association, and served on the board of Lanka Clear as well as Colombo Stock Exchange. Mr. Tyagaraja has been active on the board of Sri Lanka's oldest business chamber, the Ceylon Chamber of Commerce, CCC, for over a decade and remains the only career banker to serve as its chairman for a 2-year tenure from 2017 to 2019. He has been a committed Rotarian for more than 25 years and is a past president of the Rotary Club of Colombo East. Having retired from full-time active management since September 2020, Mr. Tyagaraja continues to contribute towards business and economic renaissance of Sri Lanka, serving on a diverse pool of boards ranging from family-owned private companies, startups in payment and data analytics, a JV in operating attire, 3 state-of-the-art art data center, a listed conglomerate and a multinational company with manufacturing interests in Sri Lanka. He continues to support policy advocacy issues of the CCC by chairing the National Agenda Committee on Entrepreneur Ecosystem. He's also a senior visiting fellow of the Pathfinder Foundation, a leading think tank. Rotarian past President Rajendra Tyagaraja, sir, if you could please turn on your camera. Thank you so very much for taking time out of your busy schedule to be with us this evening and enlighten the youth of tomorrow on how they must be responsible citizens with regard to their individual and corporate financial management. Thank you, sir, for joining us.
My pleasure.
Our next exceptional speaker joining us this evening is Jitendran Gajendran. He is a solver of complexity. He is a partner at Gajma & Co. Tax Consultants, whose reputation precedes itself, a leading chartered accounting firm that specializes in taxation and carries out all services from incorporation to liquidation. Gajendran had a baptism of fire when he started an agriculture business with a few friends In his own words, we built it into a 150 million revenue a month company and then bankrupted 2 years later. This was a jarring experience, but it changed his life. He was given a burning passion to dive into the house of a business and to solve complex problems. He recently served as a judge on Agriton. He was chosen as one of the new establishment 100 by Echelon and was one of the 25 millennial torchbearers by LMD. He serves as a non-executive director of a number of companies in diverse industries and is an active participant in the startup world through the Global Students Entrepreneurship Award of the Entrepreneurs Organization. Most recently, he has also become an active participant in the Lanka Angel Network. He has served on a diverse range of panels, most notably CSE Issuers Forum for family businesses. He was also interviewed on Cinnamon Chat by Amit and Biznomica, if I pronounce their names correctly, TV1. He believes problems are an opportunity or exponential growth. Thank you, Mr. Jitendran Gajendran, for joining us this evening, taking time out of your busy schedules, being here with us, enlightening the youth of tomorrow. Thank you so very much, sir, for joining us this evening. Last but not least, Mr. Renal Vrikkamratna. Mr. Renal is a research analyst and SoftLogic stockbroker. His areas of expertise include corporate finance in debt, equity, and mergers acquisitions. His equity market transactions include IPO of Jetwing Symphony PLC, the listing of Laughs Power PLC, and 7 listed debentures insurance. A rights issue for Orient Finance PLC in 2020, the delisting of Morrison PLC. He's also been involved in multiple corporate advisory assignments and cross-border of mergers and acquisitions. Reynal is currently reading for his BSc Economics and Finance from the University of London and holds a diploma in corporate law from the University of Colombo. Thank you, Mr. Reynal, for joining us this evening for this conversation on financial literacy, encouraging and enlightening the youth of tomorrow to lead their lives in a much productive, efficient, and better way. Thank you so very much, gentlemen, for joining us. We're going to go into the first question for conversation. I'm going to start the answers, of course, with Rotarian Tyagaraja. Can you give the audience a basic understanding of what stocks and bonds are? How can the two be used to create a balanced investment portfolio for the average person? We'd like to start the conversation off with Rotarian Tyagaraja.
Sure.
Yeah.
Thank you very much. Stocks, in a sense, is an opportunity for an individual to have a part ownership in a company or a corporation. So the stock may actually be listed or maybe unlisted. The main form of reward comes in the form of either a dividend and or capital gains, the capital depreciation. But it also happens to, as you have the highest degree of risk in a whole spectrum of investments connected to investing in a company. Because in terms of liquidation, it is the last in the pecking order of where you get your money back. Whereas in the form of bonds, an investor becomes a part owner in the debt which is raised by that company, where there is a definite or definitive repayment at the end of a particular period. And the reward comes in the form typically of a interest coupon, where the interest frequency could be anything from a monthly, quarterly, semi-annually, or annual basis. Now, here again, the bond may either be listed, it may be unlisted. The bond, the opportunity may be to invest in a company and also a sovereign, even in the form of a municipality or in the form of a government. Also, the other thing to bear in mind in the case of a bond, you have 2 types of bonds. You have what we call the senior debt and subordinated debt. The main difference between the two is in the case of a subordinated debt, your degree of risk as well as your return is higher, because again, in the pecking order of payments, you become entitled to be repaid only after all the other existing debts of a company gets repaid. So you need to understand that. In terms of deciding on how one balances a portfolio, it will change from individual to individual. It will depend on broadly three categories. One is your age. Where are you in the spectrum? Your experience in actually getting your hands or feet wet in the investment game, to what degree you have that experience. And the third is, what is your investment philosophy? Now, this investment philosophy can range in the extreme aggression to invest everything on the higher risk-based stocks or equity market. Or you can go to the other extreme, being extremely conservative, where you tend to invest around 50% or no more than 50% in equity, and the balance in a combination of bonds and or cash. And in between those two extremes, you will have moderately growth focused and or aggressive, but not extremely aggressive. So that will depend again on people's individual appetite and personal circumstances. So I hope that gives some perspective.
Thank you, Chrishantha Herath. Would Mr. Gajendran and Mr. Renal want to add anything to Mr. Tyagaraja's answer? If they would like to add anything, this is the opportunity. Mr. Gajendran?
Fine, that's fine. We'll let him go with that.
Okay. We're going to go into opening remarks now. I'd like to initiate this segment with the presentation prepared by Mr. Gajendran, if he doesn't mind.
Share the screen, hold on. Hi guys, the question that was asked to me was playing Wall Street. So one of the things that I was thinking was I would create a ball. Like if you look at the ball in the middle here, it's what you call psychologists use to make people do things, right? It's called a hypnotic ball. A hypnotic ball is where when you look at something, you suddenly don't have control of your body parts. That is generally what is the expectation of people who have been in the market for a while. They believe they do things that no one understands why they do it. So even though they are logical people outside the market, when they're in the market, they are completely illogical and they completely lose control. That is if you're in the older spectrum. That means myself, Mr. Tyagaraja, the older spectrum of things. The younger spectrum of things, you have a different problem. Recently, there was a meme that was put during COVID that, COVID was critical, but under control. So someone said the meme, it is like having loose motion, but in slow motion. So it's something like that, right? So this, for the younger guys, it's a different situation. They don't understand what is happening in the market. And when they come, they get stressed out, they'll figure things out and they lose money. So for that, I'm here trying to explain to you what investment is and what are the basics that you have to look at it. So the types of investments, there are 5 forms of investment I have said here. One is shares, another one is Bitcoin, one is REITs, one is pyramid schemes, one is bonds and gold. You can do everything here except the pyramid scheme. Pyramid scheme is the one that puts you in jail if you're the one authorizing it, and if you are there and you try to look at multi-level marketing, that also it is legal, but at one point it becomes dangerous. So you have to be careful, and allocation of capital is the biggest reason that people lose money. If you put 100% of your money in one asset, and then suddenly that goes bad, because everyone can make a mistake, which you have to be very aware of. So how do you buy shares? So this is a question that we all would like to answer. So let me simplify it. So can I, as an investor, beat these big bankers, top professionals? How can I beat them? First is by understanding the business. So you have to do your research analysis. How do you do that? If you like to buy Odell shares, you go to Odell and you understand if you like their experience, the products they sell, are they selling things? You might understand it like that. So if you go to Pizza Hut, you have gone and understood if the goods, the food there you like, and there are people coming. You have to go towards something that you understand. You should not go into industries and areas where you do not understand. So if you're a doctor, it makes sense to go towards hospitals. If you're an engineer, you should go towards industries which are more in alignment to your understandings and know-how. So after that first step, the second step is identifying what type of business it is, right? So you have here, which Peter Lynch, the famous investor, once said, there are 6 different types of investment companies. One is a cyclical. You have a slow grower, stalwart, turnarounds, asset players, and fast growth. Who are cyclicals? Cyclicals can be car companies in other countries. In Sri Lanka, car companies are also cyclicals, but it doesn't happen all the time. So after you identify what type of company you are, you come and understand what is the true value of the company. That is the intrinsic value. So what is the fundamental asset that is there? The value that a banker will, mortgage against. What is that asset value? That's very important to understand. And that is done generally by looking at the future cash flow. So you look at, next 5-10 years, you should predict, will this company be there? And will it give you revenue? If it gives you revenue, you can calculate what you call an intrinsic value. So intrinsic value is generally driven by sales. So if you identify sales, you have first one part of the engine, that is function. I will explain later on how you can figure it out in more depth. So then you monitor and performance. So you monitor the performance, what you have thought, your idea, and then you figure out if it is going to really work, what you're thinking and what the information that is coming in the quarterly accounts, annual accounts, the disclosures are more in line. This is when I talk about the stock market. Finally, even though we make assumptions and forecasts, and I am a consultant, a professional, I would like to assume that I can predict things of the future, but that is not true. Most assumptions are wrong. So the concept here is a margin of safety. So if you have a big enough margin of safety, doesn't matter, even if you make all the mistakes in the world, you should still make a return. That's the principle of margin of safety, and it's very important. So let me explain to you margin of safety and how do you, as a young guy, I was there a few years back trying to figure out how to buy these shares, right? So here there is an image of a bar. In a bar, you have a bouncer. So let's take Rhythmika as the bouncer, right? So he's a bouncer and he's there and he has to decide who is underage and who is overage, who can drink and who can't drink. So now walks in Mr. Tyagaraja. And then when he sees Mr. Tyagaraja, he realizes clearly, he can figure out that he is overage, he can come in. But the market is not like that. The market is not like that. Sometimes the market will consider Mr. Tyagaraja is also underage. But Rhythmika understands after he sees it that clearly he is above 18 and he can have a glass of alcohol. So the idea here is to make sure that the value, that the underlying value you identify. So if you can figure out companies where it is above the age of 18, where the old established companies, the value is there, you can go through, you will succeed. Otherwise, you will struggle. To understand in more depth, then you need mentors, people. If you don't have mentors here, you can get mentors online of established investors globally. Stock market has been there for a long period of time. So there is now a principle called 100 baggers or 100 times. So the companies that become unbelievable in size, right? That becomes the ones that make you extremely rich. So identify that. There are two ways, dual engine as they call it. One is you should have a growth in sales. So currently if the sales is 10 million and you can grow to 100 million, that's a growth in sales. It's 10 times growth. And then you must have a low valuation. So if your PE was 2 or 3 or 4, that is price to earnings ratio. If it is low, and that also can has potential to double, then it becomes a dual engine. So the chance of you hitting a 100 bagger is very often more likely. So if you have established companies, like if you take Sri Lanka, like companies like John Keel's, getting a 100 bagger will be difficult with them. If you have companies like Apple or Google, internationally, there also it's very difficult to get these 100 baggers. The ones that, as a young person, you want to achieve, right? Not the small hit, 20% return or 30%. You want to hit 100 times multiple. If you put 100 rupees, you get 100 times. So now we have figured out how to buy a share. We're going to basic understanding of how to buy a share. But now the question is how to sell a share. Most of us try to predict the correct timing. So, there is this old story in the investment world about Cinderella. Cinderella, you have all seen the cartoon. And at 12 o'clock, her and all her things become a pumpkin and, it disintegrates. But unlike her life, where she could watch the clock and realize there is 11:58, 11:59, 12 o'clock, we do not have that ability. Our clock is the clock to the left. If you can see, there's a clock to the left which has no arms. So the clock that we have as a stockbroker, stock market, anyone in the stock market, it's something like that. So you cannot decide when it is actually 12 o'clock. So trying to predict the time to come, it's at the bottom or at the top, is a wasted endeavor. You would just waste time and money. So then when do you sell shares? If you can't time it, when do you sell shares? First is when you have a better opportunity. So if you have found a company which has bigger multiple, bigger difference than your intrinsic value. So if your share price of the company is say 10 rupees and the intrinsic value was 100, and now you found a company which is worth 200, then you would sell the shares. Second one is the market has changed. So now, for example, you predict, hotels will do very well, airlines will do very well, and suddenly they don't, then that's another reason for change. Third, there is what we call a bull market. So when there is a bull market, there is a rapid increase and the valuations or the pricing is way beyond the valuation. Finally, is the most important one, where what you think should come and the information you get in the accounts are different. So you don't maybe not trust the management of the company. You have to be careful. If you don't understand what they're doing, then it's best not to be. So now, right, we have figured out how to sell. So let's talk a little bit about psychology, investors as a psychology of investor. First is small investor has no hope. Some people believe, I have only 1 million rupees. I have no hope. But that is absolutely not true. If you have 10 billion rupees, it's very difficult to find that small, unbelievable companies because it's too small for them to invest. But with 1 million rupees, you have the liquidity or the ability to sell and get out of a share. So it is you have an advantage. Second thing that a lot of people, when you're in the market, you have a thing called confirming evidence. So you confirm. So there is a small story of how confirming evidence works. So there was a boy who was meeting a girl. He thought he was very handsome. So he asked the girl, am I handsome? So she said, yes, you're very dark and handsome. You're dark and handsome. And then the boy is happy and then he went off. And then the girlfriend next to, why did you lie to him? She asked, why are you lying to him? He said, no. Then the other girl said, no, I didn't lie to him. I said, when it is dark, he is handsome. So when I can't see him, he is handsome. So the confirming evidence sometimes people give is completely different from what you have to do and understand. Third is what I call dangerous animals. So if you are an investor, there are a few dangerous animals. The first dangerous animals are friends. Friends are dangerous animal number one. They tell you things about the market. They tell you should sell, you should buy. That has no relevance when it comes to the market. It's just their feeling towards the market. You should understand better. The second dangerous animals are people like politicians. Politicians are the other dangerous animal. They tell you things, the market is going to crash, market is going to do well. They can affect it sometimes, but not always. And they give the wrong impression of things. Then there are third type of dangerous animals are what we call advisors. And if our fees and rates are too high, it can be a problem and it is very dangerous. You have to be careful. You have to be aware. Finally, let's move on to another element called emotion. So like anything, if you have emotion in the market, you have to be careful not to be swayed by it. And if you sway too much, you will have bigger issues. The fifth one that I want to talk about is in investment, unlike in other things, you don't have to swing at every ball. So every ball doesn't have to be a 6, every ball doesn't have to be a 4. You can not swing at some balls. And that makes a big difference. And the final one that you have to think is, how much can I lose? This is sometimes people say, my share price is 2 rupees or the price of the stock is 1 rupees or 10 cents. How much can I lose? The answer is everything. So you have to be very careful. You have to understand the management. You have to understand the balance sheet and cash flow. And if you don't understand that very well, you can lose everything. Then there have been instances people have lost everything. They put their whole house on it, thinking it is so low it can't go, and it has gone bankrupt. So you have to be very careful. So finally, I would like to say the basic principle here that you have to think is the share market price is just an indicator. The value, underlying value, is what makes the difference. You have to decide in buying shares if you understand value. And as long as you put in the effort, anyone and everyone can invest in the market. Thank you, Ritmika.
Thank you, Mr. Gajendra, for that extremely informative presentation. I'd like to divert our attention to Mr. Renana for his opening remarks on this conversation about investment and financial literacy. Mr. Renal?
Hi, thanks, Ritmika. So yes, so actually, I believe Mr. Jito actually went into a fair amount of detail in terms of the share market. So I won't touch too much on that right now. But again, just purely as an opening remark, one thing I would like to say is the fact that just because there are a lot of options and just because new investors see a lot of possibilities in the market, you do see people sometimes being afraid, thinking that the options are sometimes too much. But the simple reality of why all of these exist is because all of these are designed to cater to different needs and wants of investors. And what I mean by different needs and wants is sometimes, let's say you want to make an investment right now. You might be able to make that investment only for a limited amount of time. Or you might want to make an investment based on a personal saving, which you know it's fine even if you lose the whole thing. On the flip side, it might even be a position where you're investing a life savings and you want to be extremely secure about it. So the reason you have different types of financial products, the reason you have different types of shares, the reason you have different types of bonds, whether it be corporate or government bonds, the reason you have things like unit trusts and asset managers in this game, the reason that you have all of these players coming together is in order to bridge the gap of the amount of risks and the different needs different investors have at multiple points in time. So in fact, you should actually look at the financial market as a market that is structured to help you. Because honestly, sometimes being very open and upfront with whoever it may be, who your investment advisor is extremely useful because it's good for them also to understand where exactly you want your money to go and what kind of a requirement you have. Are you an investor looking to make a big return? Are you an investor looking to make a safe return? And definitely what your period in the market is. So considering all of that, I think as the discussion progresses as well, we would start to highlight multiple options and avenues for people to make their investments.
Thank you, Mr. Renal. I'm going to move on into the Q&A of today's evening discussion. The first question we have at hand is, what is the importance of financial literacy for a younger generation? This is a question that has a lot of subjective answers. I'm going to start with Rotarian Tyagaraja to tell us about what his input is when it comes to the younger generation and their literacy in finance. This is Rotarian Tyagaraja.
Thank you. So my perspective of financial literacy is that it's one's ability to manage their own financial affairs, not just from a basic day-to-day existence, but to also look at medium to long-term aspirations, starting young and aiming for something. Now, in doing that, broadly, there are 5 elements in good sound literacy. One is to have a good understanding of basics in budgeting. One needs to know how to budget. Secondly, one has to be mindful of what interest rates are and to understand the importance of interest rates. Then the third element would be starting early and prioritizing savings, because while one can always use borrowings to invest, it's always an advantage to save first and invest, because you're then more in control. And then the fourth element is, in this game, you will always be tempted with offerings leading to a debt trap. The debt trap, especially in high growth situations when economies are doing well, interest rates are low, the temptation to borrow excessively and get into a debt trap is always there. And the fifth one is your personal identity theft, the risk of identification theft, and what can arise from that theft in terms of an erosion to your whatever accumulated wealth, because today, especially the younger generation, deals in a digital economy, online banking, online transactions. So the need to be extremely mindful of people who will be interested in your personal identification. So there are 5 elements in broad financial literacy. It's not only about money.
If I could make a request, Rotarian Tyagaraja, because this conversation is directed to the youth and some of them aren't aware of some situations, could you explain with an example how exactly a member of the youth would fall into a debt trap situation, or he or she would put himself into a situation where he would be the victim of identity theft?
So I'll give you an example. When the war, the 30-year-old civil conflict was over, there was a whole spectrum of Sri Lankan society, mainly in the north, the east, the Vanni districts, which were not exposed to mature financial literacy or availability of basics of financing available. And during that period, you had hordes of people from the Western province as well as below reaching out to these people, especially on consumer financing, on consumer, giving them a lot of attraction and temptation in terms of white goods, right? Television screens, where people were not even aware that they're getting an offer today, which they have to pay over a time. Many times people actually are thinking that these were grants, because these were people for 30 odd years who were used for NGOs and other people coming and giving them handouts. And a lot of these people actually assume that this was another form of handout. A white knight has come from Colombo or somewhere else in a lorry, in a van, with a giant, 30-inch or a 40-inch screen, and suddenly that little modest house is eliminated. And then after 3-4 months or 6 months of interest-free thing, you get a telephone call, you get a second call. If there's no answer, then you get somebody visiting in a two-wheeler or a scooter to your village and saying, why haven't you repaid? And then once you don't understand and you get into a difficulty, then somebody else comes with another van and then removes that item from your house. And then you get exposed to a complete shame factor in a village. And that was one example where complete minimal financial literacy, really how it affected a complete segment of our society, right? So this is one example. In terms of personal identification, there are a whole series of things happening today. You see, the smarter technology moves and more devices are used to make life easy for you and me, one has to also be aware there is another segment in society who are seeing how to exploit that convenience to you and me and how they can come in. Say, for example, there was a time, I'm sure Jito might now do it, but there was a time when, say, Jito's dad and I, when we go out for dinner, we would wait for the waiter, steward. We would give the credit card, he goes, and then he brings a piece of paper and we sign. But there, things progress subsequently, and this maybe during Dito's time, you would have the steward actually bringing a device in front of him. And let's assume he was sitting in a hotel by the window or a mirror, and he would be very happy. He'll take his flashy Amex card and he'll be, swiping it without realizing that there is somebody out there just outside with a laptop or a mobile phone trying to clone, because he's using Bluetooth or whatever he is as technology without realizing that it's clonable. right? And then what happens? His entire personal identification data, which is in that card, gets removed. And once that is removed, I'm just giving one example, you will have another group of people who can recreate a card, a piece of plastic, using his data, and then go and happily shop at the expense of Mr. Jitendran's bank account. Now, this is not new. This sophistication, I'm just going to take a couple of minutes, right? This sophistication is now when, say, Jito is in a hotel lobby, somebody is scanning. But I can tell you, having lived and worked in the UK, where I'm calling from now, way back in the 80s, there was a group of our brothers and sisters who were famous for cloning this at ATMs. You know what used to happen? You innocently go in an ATM and you wait in a queue, and then it comes to your turn, you put in your card. When you put in your card, you punch in your 4 letters, the characters. You don't realize suddenly there's somebody behind you trying to peep over your shoulder and read those 4 digits, right? And very often you're in a hurry, you take a card out, you don't wait for the receipt, you walk away. That guy waits to collect the receipt and gets the card details. Now there is new technology, of course, where you only have the last 4 digits, but those days the 16 digits were available. So now you're armed with the password and you're armed with the card, and you had a whole industry, unregulated industry, which was producing cards, plastic cards, at other people's data. That was at the other end, 40 years ago. But today it has moved into a different degree of sophistication, where personal identification kept. Guys are called, suddenly you'll get calls saying you have got a lottery, or we want to verify that you are the person who is on this number, because there is a $10,000 or 100,000 rupee reward coming to you for something, or a lottery. Can you give your NIC number? Can you give your mother's maiden name? Now, those are the basic information which you normally give when you are on a call center or whatever it is for your normal security. So with that information, it's very easy for somebody to go in online and trying to hack into your account. So one needs to be very careful about who asks the right questions. Even if it's your banker, don't be afraid to ask, why are you asking these questions, and put them on the back foot before you satisfy yourself. So it's very important.
Thank you, Rotaract Tyagaraja. I'd like to pass the opportunity on to Mr. Gajendran now to also speak about youth and responsibility with regards to financial literacy.
So Mr. Tyagaraja, and obviously knows my father well, so they have been talking about this for a very long time. So I'll give you my little 2 cents about it. First of all, financial literacy in Sri Lanka is very bad. Our education system is not in alignment with that. From a young age, people should be taught how to handle money, which is a basic need and basic requirement, which does not happen. So you don't have it. But most of the guys here, Rotaractors, Interactors, are generally what we call middle class. You are somewhat well-to-do community. So the issues you face will be even a little bit different from what the other guys face. So now all of you all might be looking at investments in like Bitcoin and protecting wallets and things like that. So when you're doing that, you have to see 2-factor authentication. You have to check your authorities, the security systems that you have to be in place, that you have to look at, which is very important. But more important than that is to understand that you don't try everything in one go. So if you're doing Bitcoin, there are scams. Some of the alternate currencies, coins are scams. There are people who have run away with few $1 billion in investment. So what you have to do is everything, take it in small doses. If you're trying something new, till you get a hang of it and till you understand who is who. When I gave you the bar example, that is the simple analogy. You have to be able to judge that person when they come through the door. If you can't judge that person, or you have the doubts, you think he's world class, if he's telling a story which is beyond belief, then you're in trouble. Anything that looks too good to be true, I can make $1 million overnight next month, think twice or ask someone who is older, because this pyramid schemes and those type of elements were a big problem where when I was a little bit younger, people were coming in, my cousins, friends, families were getting into this, pyramid schemes. People were asking them to invest and then ask me to buy something and so on. The older generation has seen it. So one way is to get the older generation. There are also like scammers, there are anti-scammers YouTube videos now. So that's another place. If you're a younger generation and you want to watch YouTube or various places to learn, there are anti-scammers. If you watch a few of those sessions, you will realize all the payback, return, refund scams, the Kenyan king scam that Mr. Tyagaraja was saying, the Kenyan king is dead, his wealth is there, I'm going to transfer some money and then send it back, right? So things like that. So these are the known scams, and you have to think carefully and take everything in slow pace. Because when we are young, we think, in 5 years, we are going to be multi-billionaires. And when you take that position, you make mistakes. So if you think long term, you might achieve it in 5 years, but you don't think of it in that short period of time. If you think of it in short period of times, you're going to make mistakes that you will regret. Because whatever you spend, most important thing that you must learn, if you learn this, it's more than anything else, 100 rupees, multiplying it by, if it goes down by 50%, you have to double it to get back to 100 rupees. So if you're at 1 million, if it goes down by 50%, you have to double now to get back to 1 million. So the first job is to protect your money. And then after that, you can do your investment. So think small and think carefully.
Thank you, Mr. Gajendran. Mr. Rana, do you have anything to add to the conversation we just had about youth and financial literacy?
Yes, I think it was very interesting, especially the fact that the whole aspect of pyramid schemes and multi-level marketing was brought out. Because I am aware of quite a few people I know over the last couple of years who started getting involved in another pyramid scheme that was starting out in Sri Lanka as well. And again, like Mr. Jito said, I mean, promises which sound too good, promises which say that, look, there is no risk, just come on board, you can double, triple, quadruple your wealth in no time. Promises which just seem too vague is always a point where people need to watch out. And one of the things you can really do is sometimes just even a simple Google search, where you search into who are the people who are running this company. What exactly is their reputation in other places? And sometimes even the most basic searches like that, which you can probably do on your personal computer over a period of about 15 minutes to half an hour, might really help you to be safe from some of these scams that are out there. And the other thing that was brought up initially was also about the whole aspect of borrowing to invest. I think one thing you see a lot, which happens especially with investors over the recent run you saw in the stock exchange as well, is the fact that when people did get returns, people got extremely excited about those returns and decided to just go absolutely all in. And the thing is, when you do make those returns, just because you have made a certain return before, that itself is not a basis to go all in. And you saw people taking significant amounts of borrowings as well, and then getting into a lot of trouble because they realized the market was not growing the way they wanted it to. Now, although a lot of people look at borrowings to invest in such a fiendish manner, I would probably look at it more as a double-edged sword. It's almost like a credit card borrowing in a sense. If you invest it unwisely and if you do not have a plan to pay it back, then yes, you would get into a significant amount of trouble. But there are instances where it can be done correctly, where it can be done practically, and therefore those are things you need to look at. For starters, I think this was brought up before as well, you do not put all of your funds into any one particular investment unless you are really willing to even see the possibility of losing it all. It's very important to diversify whatever you invest into different kinds of stocks. It might even be a certain portion in stocks, as Mr. Tyagaraja mentioned, and a certain percentage in things like unit trusts, a certain percentage in things like fixed deposits and other investments you might make. But overall, it's about managing your risk in that aspect.
Thank you, Mr. Rana. I'm going to go on into the next question we have this evening. So the question is, foreign exchange, or Forex for short, is another investment pathway individuals can use. Could you explain what foreign exchange is and how people can profit off these? There is a sub question attached to this question. Forex has garnered a bad reputation with the increment of pyramid schemes. Can you explain how one may be able to identify a pyramid scheme? So I'm going to request for the answer first of all by Ms. Rotaract Tyagaraja. Do you want me to rephrase the question, sir? Rotaract Tyagaraja, you're on mute.
So essentially, a foreign exchange is where primarily where one, for the purposes of trading between two nations, one uses the parity between the two individual currencies of two nations to buy or sell goods. And typically you need an underlying transaction to exchange your country's currency against somebody else's currency. And usually it's done through a regulated, formalized mechanism like a commercial bank. But saying that, and in Sri Lanka, it is pretty much, that is how it works. But in the more mature open markets, you also have active trading taking place where people take positions on the respective currencies, even though, say, one may be living in Singapore and taking where the host currency is Singapore dollar, may take a multiple views on, say, the Aussie dollar or the Singapore New Zealand dollar and or the US dollar as to how they see the movements based on either proper technical analysis or insights as to macroeconomic policies of those countries, and may invest part of their investable funds in these currencies for currency movements. And people have made money. Yes, it is one way of making money. But as far as I'm aware, I've been in banking for literally 4 decades. In Sri Lanka, the system doesn't readily facilitate and permit people to speculate on currency. Even though you have personal investors who are legitimately allowed to have foreign currency accounts, might be playing between currencies. Say, assume that you have a dollar deposit and you may then switch between dollar to sterling and euro, depending on the view you take and the view advice you get. It is not something which is readily advised and supported by the regulator, because the fundamental premise of foreign exchange trading is to have an underlying transaction, a trade transaction to do it. So my take on this is twofold. A, if you are going to get into it as a personal investor, make sure that you have a lot of time to study and know what you're getting into. It is not like just putting money into, say, a growing public listed stock. And secondly, if you don't have the time, and make sure that you have a good advisor, it has to go through a bank. Because here we are not regularly openly allowed to go into an exchange outside and buy or sell online. So you will have to work through either a private banker or a high net worth banker or a banker. Make sure that the person you are dealing with also understands the nuances of foreign exchange, so that the advice he or she gives you is sound. Because there's a big difference between doing domestic bank related transactions and foreign exchange. So one needs to be, I would say it's not everybody's cup of tea. If one has the ability to study, analyze, and also the time, yes. But again, I want to reiterate, it is not something which is openly facilitated by the local regulatory regime.
Rotaract Tyagaraja, how do you address the sub-question attached to the question, Forex has garnered a bad reputation with the increment of pyramid schemes? And
So in Sri Lanka, what happened was, I think, if my memory serves me correct, the first incidents took place way back in the early 90s. I'm not going to mention the name. There was a little operation which took place in one of the then popular shopping malls in the heart of Colombo. There was a little operation which took place with some foreigners who were based here. They were attracting people like you and me to come and promising good returns, and the trading was supposed to be done on the phone and through telexers. It was totally illegal. It was without the permission of any regulation. I know eventually the regulators caught up a few years, but they were here for a few years. And in the process, I know several people got burned because, for the very reason I think Renal mentioned, people had not done their homework as to who these people are, right? What they were about, where was the soundness, what happens if a transaction went the other way, who was going to undo what was supposed to have. So those questions were probably not asked because of the excitement, and there was a price paid. The other known, more recent case of a pyramid scam in Sri Lanka was part of something which started in Nepal but came into Sri Lanka, called Gold Quest. Some of you all may recall. And eventually, by the time I think the regulator formally shut the door, I think the official record is as much as $15 million had gone out of the country. Right? So yes, again, it's this a combination of this multi-level marketing and the promise of extraordinary returns in a short period of time. And when one doesn't ask, how can that happen? If those questions are not asked, then you are exposing yourself for this sort of a scheme. Right? Of course, as Jito mentioned, today, unlike 15, 20 years ago, with social media and digital media, there is so much of information, relevant information, which is now available. All you have to do is to Google to find out what are the top 10 scams currently going on. It's available now. I mean, just before this session, I was doing some preparation. I went in and found out there was one particular site which gave access to what are the top 15 scams currently. Right? So that's good. So you know that there is a whole group of anti-scammers also now available. So it's up to us. All you need is a smartphone to just log in and make your own inquiries and then take a call.
Thank you, Richard and past President Tyagaraja. I'd like to move on to Mr. Gajendran, if you have any input to the conversation we just had as well.
So I won't talk too much about how of the Forex trading side of things, but Forex itself can be now done in a completely different way, which is what we have to be careful about. When with the upcoming of Bitcoin and these coins that have come in, which are not regulated the way other currencies are, even it's outside the central bank regulations, they have not categorized it as illegal. So there is an element of transactions that you have to be careful. Now, how you could do something like that is there are things called stable coins like Bitcoin and all. Then there are stable coins. They are what you call aligned towards the US dollar, or there are coins that are aligned against Chinese currency or the Japanese yen. You're aligned towards that currency, and you could trade against those currencies by buying one currency or another. But generally, when you're investing in cryptocurrencies, you're not looking at that, but you could do something like that also. So you have to be careful about that, which is a more of a modern day situation that you have to be careful. And at the moment, it's beyond the scope of the central bank, at least the regulation.
Maybe things might change with the port city. At this stage, within the old Colombo framework, it is still frowned upon.
Thank you, Mr. Gajendran. Mr. Renard, do you have anything to add to the conversation we had?
I think that was quite comprehensive, but if I may just add one small detail, and that was, although yes, people do find different ways of investing in crypto, right now when it comes to investing in Forex, there has also been a recent Exchange Control Act that was passed by the government. And when it comes to purely Forex trading itself, that is right now deemed as illegal through Sri Lanka. So unless maybe you turn out to be a student who goes abroad and then has an account there and starts trading or different other options which may be available, directly taking part in Forex trading per se right now is not possible through Sri Lanka.
Thank you, Mr. Renal. I'm going to move on into the next question. This is an open question for whoever wishes to answer it. Could you walk us through the process of opening a CDS account and choosing a reliable broker? Now, these questions were compiled by members of our club who have a certain knowledge about finance. So if you could explain what these technical terms are as well for our regular viewers, please, that would be immensely helpful. Question again, could you walk us through the process of opening a CDS account and choosing a reliable broker?
Yeah, I think
Renal should take
sure. I think probably that's a question I might be able to answer. In terms of opening a CDS account, now quite thankfully, I think due to the impact of COVID, one of the positive aspects we saw is the fact that this system has come online. So in a very practical sense, to a new investor who wants to open a CDS account. Sorry.
Could you start off by telling us what is a CDS account?
Yes, sorry. So CDS account is basically, the CDS stands for the Central Depository System. And that is an account in which you initially put your money in order to start making investments in the Colombo Stock Exchange. It can be in any stock exchange per se, but right now in Sri Lanka, we just have the Colombo Stock Exchange. And in order to make an investment there, opening a CDS account is the first step of that process. Now, in order to do this, there's actually quite a very simple process right now, which is you can download the CSC app, which is available on the Play Store and the App Store. And once you download this, you will need to sign in and subsequently fill in different types of details. One type of information that you need to give in at that point is obviously your personal information. You would also need to give in your bank details. You would also need to declare the source of funds from where exactly you are getting your money. You would also need to declare an average investment that you're looking to make. And at that point, you would also have to give in things like your identity card, some billing proof, and some basic details like that, along with a picture of yourself. Now, even though this might seem very excessive in terms of the amount of information people are asking, the reason that you go into this much of depth is in order to ensure that there are no frauds. The moment you have a regulatory body monitoring these accounts and having that kind of information, that's in fact what allows markets to function easily and efficiently, because that's where you can prevent a lot of fraud that could otherwise happen. So although, yes, it seems like you are saying a lot of information, it is probably also for your own safety, and it's a standard regulatory process. And in fact, that would also take us to a bit of the previous conversations that we've had, where if you're really not sure of investments that people are promising you, whether it's crypto or whether it's Forex or any other means, the moment people show you an investment where there is virtually nothing to be done, it's just a cash transfer that needs to go somewhere, that in fact should raise an eyebrow. Because according to the way the financial markets, the way regulation has developed, it shouldn't be possible for you to just freely move around money into different countries, into different investments without any regulation whatsoever. So actually, this is something you see when you come to make an investment in the stock exchange. But this is also something you should consider when you are being told of other investments, other possible investments. I hope that was clear.
Thank you, Mr. Ranal. This next question is actually directed to you. The question is, can you give a brief explanation on what fundamental and technical analyses are and how people can use them for their gain?
Right. So fundamental and technical analysis are two of the main things investment advisors and actually people who invest in shares in the stock market look for in terms of when making an investment. Now, a fundamental investment, as Jito previously mentioned, was where you go, you understand how the business operation works. You look at things like how the management is doing. You look at the financial statements. You probably also look at the industry that they're catering to and you see what the growth can be in that industry. You look at what some of their competitors might be doing and where they stand compared to the rest. And basically, you analyze where the company is right now and what its potential for growth is. And based on those, you decide to make an investment. Now, those factors are called fundamentals. And then you come to this thing called technical analysis. Now, technical analysis is a slight theoretical thing where you just look at the movement that the share price has had over the past whatever period. And based on the movements, you figure out whether the price might go up or might go down in the immediate future. Now, usually what we advise people when it comes to fundamental and technical analysis is actually a mixture of both. So you fundamentally decide what stock you're going to get involved in based on the fundamental analysis. And then once you do decide what that stock is, you're also faced with the question, is now a good time to buy? Do I buy it today? Do I buy it tomorrow? Do I buy it a week later? And that is where technical analysis comes into play. And in fact, when you do start making an investment in the stock exchange, you would also hear of these various people like stockbrokers or investment advisors. You'd also hear of research analysts and other individuals. And fundamentally, the difference in role that these two parties play is that a lot of research firms, they look at the fundamental side of most of these stocks. And what stockbrokers or investment advisors do is they take that fundamental knowledge and research and they figure out based on technical analysis and also their knowledge of the market and their knowledge of the industry and figure out what the exact time to make that investment is. I hope that covers it to a fair extent.
Yes, thank you, Mr. Ranal. I'm going to move on to the next question. This is again an open question to everyone. If you are to make a long-term investment on a company listed on the CSE, what do you look for in the company? How would you use a technical and fundamental analysis to make this decision? Again, open to everyone.
So if can I take this question?
Yeah, go ahead.
Yeah. So this, when you're looking at it from a fundamental or a technical perspective, technical takes, you have to be in the market. So generally, if you're using technicals, you have to be willing to trade day in, day out. Having another job is a problem because you don't have the time to be watching these graphs, looking at how it moves, sell-off patterns, all that has a problem. Fundamental analysis is a little bit different. You can do that and you can go somewhat to sleep. So that means you invest and then you can go to sleep. So what happens is you have to search and find companies which are of good value. So if you go to a restaurant, you like their food, that's a good sign. If they have only one shop and they can expand to 25 shops and they have the money to do it and they have given a direction to go, then that's a very good sign. That means they're going to grow. Then if you look at, is a company has a good service organization? Is it service based? Do they have sales? Is it sales based? Are they focusing on sales? Do they have the ability to sell? Then another good element that you can see is, do they have the people? Are their people happy? If you talk to one of them from those companies, you might know one guy working in that company. Sri Lanka is a small world, right? And they say 7 degrees of separation in other countries. That is, within 7 people, you can speak to anyone. That means in the US, from 7 degrees, you can meet the president of the US. In Sri Lanka, I think it is more like 2.5 degrees of separation. So within 2.5 people, you can even get to the president of the country. It's not so difficult, right? So what we need to find is people in those companies understand, how do they treat their people? Are their businesses good? Operation management is good. Because if the management is not good or the people are unhappy, no value will last for too long, because these competitive advantages are less now. If we say 40, 50 years ago, one of the advantages was information. So if you had information, you were ahead. If you had a Bloomberg terminal, you are far ahead of anyone else, because you get more information than anyone else, clearly. But now you can Google and get not as much, but a significant amount of information you can get at less cost. So the fundamentals is to look for a good sales organization, look for a good management, and then hopefully find it at a reasonable price. So when I say dual engines of growth, one is reasonable price. So you have to look at price earnings ratios, which are at low 2s, or book values. It depends on the company. You have to figure out, and then you will feel it. You will understand. If you don't understand it, then slowly invest into this company. And just because the company is doing well doesn't mean you have to invest more and more. You have to see, is your logic working? Do you understand why the accounts and the revenue is going up? So if a company went from selling 100,000 cans of beer to 1 million cans of beer, why did they sell increase? Do you understand why it happened? If you don't understand it, that means your knowledge on that business is not so much. So even though you might have done it well, you have to be careful.
I think just to complement what Jito said as a principal guiding light, use fundamental analysis typically for the longer term investment, and the technical analysis if you're into short term trading, as a general guideline.
Thank you, Mr. Gajendran, and thank you, Rotarian Tyagaraja. I'm going to move on to the next question. This is, strategy plays a vital role for investors. Dhammika Pereira and Nimal Pereira are two very influential individuals in the CSE, but with contrary strategies. Dhammika Pereira acquires controlling stake in companies for the long term, while Nimal Pereira has a short span between entry and exit. Which strategy do you incorporate in your investments, and which would you advise more on?
So I'll tell you what has made sense for me.
Yes.
I have not had the luxury of too much of personal time for myself in the last 40 odd years, spending most time taking care of other people's money. So as a result of that, my principle has been to look at medium to long term horizon, rather than and then look at. I'm not going to comment about those individuals you mentioned, but I certainly endorse the principle of control, where you can shape the future of the organization if you have a correct vision. The only issue I have for that is the willingness of appeasing and also engaging your minority shareholders. And your dividend policy is a very important question there, because very often we have had, at least I have in the past 30 years seen one particular serious investor in this market who was a chairman of a top 10 conglomerate in the country, who actually, I think, also went into courts once on the issue of dividend declaration and challenging companies for not declaring when they have excess cash, on the principle that if you have cash which you don't need, give back to the shareholders. As then when you need, you go back and call. And by doing that, you're also having a much better quality of investor engagement with your whole larger vista of investor group, not just from a controlling few, so that it makes the market more dynamic. So as long as that part is taken care of, I am very much in for a medium to long-term haul, which has made sense to me.
Mr. Gajendran, Mr. Rana, if you have anything to add to what Rotarian Tyagaraja said.
So for me also, I looked at this technical analysis maybe around 10, 15 years back. And what I realized was that I do not have the competence to do it. Maybe others do, but I do not have that competence. Understanding a business with the fundamentals and long term is, it's somewhat easier to do. and it has some proven track record. These companies have been here for a few hundred years. Which is a good company and a bad company. If you do revenues, you look at it, you have a rough idea of it. But today is, someone like in Twitter or something, someone like Elon Musk says Dogecoin to the moon, or they say some currency, Bitcoin to the moon, they say, and then it goes up. I don't know how it works. Yes, you can make money. And if the person who makes money, more power to them, because there is advantages in your niche. So if you understand it well enough, you understand how social media is moving, you can gather all the information, and when they push it, you make money. Yeah, you can do more towards technical, because even technical analysis is now being moved by social media. And that's something you have to be very careful. Now in the US, there was this Robin Hood fund where they destroyed wealth of big funds, because the funds decided through their analysis that these guys are going to short them, technically bring them down. They decided together, all of us are going to beat the big guy, and they bought, and those guys nearly went bankrupt, those big funds. So this technical analysis is now is being counteracted with social media. So it's you have to be careful, but if you understand it, yeah, more power to you. It's your personal choice.
Thank you, Mr.
I think
Gajendra.
I would agree with the sentiments of the two panelists before as well, that I am also a firm believer of investing based on fundamentals, and investing based on fundamentals would naturally see a slightly longer investment horizon. But once again, if you are a person who really likes to take a risk and in a sense almost gamble his money on an opportunity that can make a sizable return but also result in a sizable loss, I think it's up to the investor. But if he is really going down a path like that, again, you'd advise them to give a lot of time into it, because if you are going to go down that track, it is a full-time job in itself. And even so, there are no guarantees in the system. There is no one foolproof algorithm or one foolproof chart that's going to tell you where the share price is. Because fundamentally, if there was, everyone would just put their money in that, and it doesn't really work like that. So yes, I am also more of an advocate for investing in the medium to long term.
Thank you, panelists. I'm going to move on to the next question. This is a bit of a long question. Could you explain these keywords and what it means for investors? Capital gains, dividend income, and initial public offerings. Sub-question attached to this question. Pick Me Lanka's IPO is one of the most talked about, mainly because it is one of the first tech companies to be listed in Sri Lanka. However, the company states in their website that they still are not profitable. This would mean low or no dividends for shareholders for quite some time. However, tech companies boast the highest capital gains. How do you view this IPO? Would this make a sound investment for you? Let us know why. Ms. Rotaract Tyagaraja, if you have anything to say about it.
So, okay, I'll leave the first part. I think Reynald probably will handle that much better than me, being a stockbroker and analyst. On the second part, first of all, I don't think it's personally ethical to comment on a forthcoming IPO. But the only thing I would say in a general principle point of view is, I'm sure when they are ready to come, even though today the site might say something about where the company is today in terms of their earnings and break even or whatever it is, I'm sure when they are ready to come, there will be a prospectus and there will be enough vetted, authenticated information available for potential investors to look at. Yes, you're right. As a tech company, usually tech companies look at breakthrough and what they have done, and also they look at scalability of the model, and usually look at future multiples. So it's quite different from your conventional medium to long-term investments you look at. So it will be obviously new for our investor pool in Sri Lanka. My only take on this is, again, it would depend on each individual person, especially in that age group, whether you're a 18-year-old or a 30-year-old, it doesn't matter. One has to look and see what is your appetite. Is this your life savings you're going to put in, or is this your spare cash you are able to put? And are you going to put everything what you have saved into this, or is it a part you are going to put? And are you willing, because with the perceived upside, there can also be the swing the other way. Are you willing to take what it takes? So I think you need to ask those questions. And then, of course, I'm sure when the right time comes, there will be a lot of interest in this. There'll be a lot of analyst reports and whatever it is. Use them. But at the end of the day, you have to be in control of the decision you take. Not say, because my neighbor over a drink said, take this. Because this is quite a new thing. One needs to rationalize as to why you are investing in this and be able to walk the talk. So to me, no two fingers, no two guys. Jito and me will definitely not think the same language, or Renal and Jito will not think the same way. As long as you apply the principles or the philosophy which I articulated, then the rest will be unique to you. I hope it made some sense.
Thank you, Rotaract Tyagaraja. Mr. Gajendra, Mr. Rana.
So when it comes to these tech startups, it is there globally. It's more prevalent than in Sri Lanka. So the reason that it is globally more prevalent is that the user base is bigger. So in the value that they look at and search towards is the number of users, right? So in Sri Lanka, they are looking at 20 million population. You have so many users. So something like a taxi app has some value. Well, you have enough scale, as they call it. But in other countries, tech startups can have a lot of scale. So the future startups of Sri Lanka will have to go globally to get their size and growth. So the real question that you should ask when you're doing this is, what is the value that a tech startup has value now? And let's say in 5 years' time, can their user base go 5-10 times that? So that's a basic question. So if you look at the number of users, you look at it and see how are they going to grow. Sometimes are they, confound things and they go globally, grow to other countries. If they have that ability, then things completely change, right? So we have to understand that these tech startups are completely different animal altogether. Mr. Tyagaraja also mentioned that, don't talk to friends in what I call the dangerous animals in my presentation. Friends are one of them, right? So you have to know why you invest. You can't go back and tell daddy, mommy, I invested in this business because, my friend so-and-so said so I'm never going to talk to him again. He ruined my life, but look after me. That's useless, right? So you can take a judgment on any startup, because you guys should have a more understanding. So now the new dollar millionaires are coming at a much younger age. The reason is they have an understanding of things. So they are using social media. You can have TikTok. You make a lot of money in TikTok. You can make money in YouTube and so on. So there is not a question of your father and mother might not understand. You might understand it. But the understanding, you must be able to put down in a half a page and explain it to your 10-year-old or 12-year-old sibling if you're young enough, or you have your cousins or nephews who are at that age, right? So if you can do that, then you have some understanding. Then it goes wrong, okay, it went wrong, and you learn from that. If you just go by even an advisor's view, you will say, this guy advised me, but what is he to you? You have to decide. Now, you're not going to go, Rithmika is too young for this, but you're not going to go and get married just because a broker told, please get married to this girl, right? So it's not so easy. So you have to think and choose and decide. And you have a reason for it, and the reason can be wrong, but you have a reason.
Just before Rena takes the, I just want to add something. While we spoke about an IPO related tech startup, I have a slightly different perspective personally. I have actually invested in a couple of tech startups. In fact, I have been a founder, one of the 5 founders of a startup which is now matured in its 6th year, and successively supported 3 rounds of capital raising. Knowingly, I have gone into it. I have understood that, or I think I have understood the technology. I have understood the unique selling differentiator, and I have backed a group of people along with 4 others and got to a stage. I know that the last round of funding came at multiples of a billion. But at this stage, the founder group has still felt that it is still not mature enough to go for an IPO, that we are confident that we can still raise money through private equity, right? So that's a thing at this degree with this amount of grayness in my beard. I think I'm taking that call. Whether I would have done that 40 years ago is a different thing. My personal circumstances is more mature now. So just a thought on that, right?
Yeah.
Just
Mr. Vinay?
one more point from there when Mr. Tyagaraja was saying, one of the things you mentioned about my agriculture business, one thing is when you're young, it's good to try something. It's much better to get dirty, try something. Nothing goes wrong. You don't have a wife or kids to look after, no stress of someone, going hungry because of this. Most of you all, if you all are living at home with family and friends, so you're protected somewhat. So once I spoke to this an investor unicorn in the US, sorry, in India. It's called Dream 11. I'm sure you all have seen these cricket matches, Dhoni and all cricket. They are advertising this cricket. He once told me that Jito, everything else is good, but the best decision he made was trying out investment at a young age when everyone thought he was mad. Right, and people are going to say you're crazy, or why are you doing this? Because you do know anything? That's the best answer. They'll ask you, do you know anything? You're 18 years old. What do you know about investment? So on. But the best advice is you try. But if you can get someone outside your family members to mentor you while you try, that will be beautiful. Now, I did my agriculture business. I didn't listen to my parents clearly. If I listened to some other people, it would be easier, because when you talk to your parents, the chemistry of it is different from talking to outsiders. You might be able to get some logical thinking. They're not going to throw it at you saying you're mad, right? But even that initial investments made a big difference. On the other future investments I have done, it has made a big difference in understanding, because you have realized, you have learned from it, and things that have happened in that, I would never go back and change. So I think if you're young, it's good to try something.
Thank you, Rotarian Tyagaraja. Thank you, Mr. Gachendran. Mr. Renal, reminding you, just to get a little more clarity about what we're talking about here, could you explain these keywords, what it means for investors, capital gains, dividend income, and initial public offerings?
So in fact, to kick that off, I'll take it from the initial public offering. Now, an initial public offering is, in technical terms, where a company lists itself on a stock exchange and offers their shares for public to invest in. But to deal with what exactly that means is that when you do, let's take it from the point of view as a businessman himself. Let's say I am a businessman and I have my company that I start up. Now, after a particular point in time, I want to raise money. I want to get new investors on board. Now, one way I can do this is privately. I can contact friends, family, and other connections I have. But let's say I do that, and let's say I do build it up into a particular stage where I feel it really needs to go to the next level. That is a point where I can say, look, my scope of how much of investors I can raise within my capacity is just X percentage. But in order to really broad base it and open it up to the entire country, what I can do is bring it on this thing that we call the stock exchange. So essentially what an IPO is an initial public offering where it's the first time you come out to the public and offer them a share or a stake in your company. Now, in terms of, if you want to break it down as to what a share really means, fundamentally or very simply, what a share means is a certain portion of that company. So if you were to break a company into 100 parts and take one part, that would be one share or 1% of the company. Now, it doesn't necessarily work like that. You can have millions of shares of a company, and that can be multiple prices as well. But that is the fundamental basis behind it. In terms of what a capital gain is, a capital gain is when the price of a share increases over a period of time. Now, once again, there are multiple reasons for the price of a share to increase. It could be because the performance has been better. It could be because more investors are coming towards it for even another reason. But overall, fundamentally, it's that increase in price. The second thing that was asked was in terms of dividends. Dividends is basically a portion of the profits that gets paid out to shareholders. So fundamentally, as an investor, when you're looking at an investment in the stock market, what you look is at one, what are the capital gains that I can get, or basically how much the share price can increase. And secondly, what is the dividend that I would get? So a combination of the capital gains and the dividends would be the total return for that particular share. Yeah.
Thank you, Mr. Renal. I'd like to direct this next question to Mr. Gajendran. Cryptocurrencies are the talk of the town. What is your take on cryptocurrencies and its volatile and unregulated nature? Are you an investor in decentralized currencies? If yes or no, then why? There is a sub question attached to it. Digital currencies have been very prone to influential people manipulating market movements, as you stated before. Could you explain what market manipulation is and how it's done?
So, market manipulation is one person's attempt to move the market by depending on the information or trying to push a market in a direction, right? So market manipulation is dependent on the regulation set in a particular industry. So now at the moment, coins are not regulated so much. So as they're not regulated, this is not market manipulation, right? So like, for example, I'm a tax consultant. You don't get taxed on mysterious or ghostly things. So now here you are not breaking any laws when it comes to Bitcoin. The same things, if you do it in the share market with Renal's advice, you will be behind, they will give you a fine, they can put you behind bars, you can have a lot of things. So those are issues that, you know, manipulation is not yet there because regulation is not there. Now the question is regulation bad? Regulation for some of these currencies, cryptocurrencies, is like their gold mine. For them, that is gold, because if they get regulated, the average person is now has a comfort to invest in that. So the market size that they open up is tremendous. So that whoever gets regulated first and be put in some sort of formal situation will create unbelievable value. Then again, coming to these guys like Elon Musk, or you can talk about Sri Lankan guys who push things with social media and so on, that is a difficult area to get a perspective of what is true, wrong, right. What you have to look at a coin is from the perspective of a currency. So you have a US dollar, you have these currencies. Now Bitcoin, Ethereum are trusted currencies. Then you have stable currencies, which are linked to US dollars, German currencies. You have US, UK pounds, you're linked to that. Then you have alternate coins or alternate currencies. Those are, they have different technology. So the real person who should invest is a person who understands the underlying technology, and you should look at it to see what it can be used, because some of these technologies, if you learn the use of it, can be of tremendous value to you and your organization and people going ahead. Now, for example, now more and more people, they want social media, young guys into the companies because they want to leverage social media because they understand it better. Crypto also will be like that. The younger you are, you have more talk, you have more chat, more discussion about crypto. You will start to understand the currency size, the coin size, and you can see what technology they are being used for. And that understanding will make a difference. So you have to get some basic fundamentals of how a currency or a coin will work. And the same basis which you can do for Forex, there's some element of it to coins, but these are not regulated. So for Forex and all are now restricted by government. Government can only print it. Coins can be printed by some investor, or they can decide, they can change the rules in their coins. So that can be a major change. So what you should do when it comes to coins is you understand the Forex market. That's a good starting point. Then you will understand how a coin would work, the basics. Then you have to see how this momentum, if you understand a little bit. It's good to invest if you get an understanding of it. My understanding is still very shallow, so I can say that.
You know, just to complement what Jito said, it will be very interesting for regulators to also see how this forms out. Now, I know from my limited understanding, the Indian Reserve Bank has officially frowned upon this, right? But for some of you who have been following crypto with the pandemic, might have heard of a news item which came about 2 weeks ago, that one of the youngest crypto billionaires in the West had committed to give up to $1 billion US equivalent in crypto towards India's current pandemic. That was announced, at least I saw it here in BBC, right? Now it will be
That's right.
Right. So it will be interesting to see, as a great gesture, humanitarian gesture, right? How that will be redeemed, and it has to flow into India, right? If it's going to benefit. And how will the current regulatory regime handle that sort of a benevolence and connect and bring that in through the normal conventional system? So it will be very interesting to see, because that's not gone into public domain. So it will actually be interesting to see how that sort of thing transpires from a digitally savvy environment into rupees and cents, which we and I are used to. So that is something very useful to follow in the coming weeks and months.
As Mr. Tyagaraja was saying, now China has banned it. America has not banned it, but they are going to regulate it. So there is a thinking that the Chinese will come with alternate coins like a government coin. So that means Chinese are famous for making everything that, so they will make a government coin out of it.
So that is absolutely important to also realize for the layman, that there is a distinction between the type of digital currency which Jito mentioned about the various type of bitcoins, and state-sponsored official digital currency, which some governments have started to issue as an alternative to their normal currency. Right? It's not only China was one, I think they're testing on it. Grenada in the Caribbean has already issued it. I think Malta has already got 2 exchanges. So it will be interesting. So that's very important to differentiate what is coming through the regulatory framework as opposed to what is mined in the open.
So one thing, Ritvika, that you have to look when it comes to these coins is that like the web, when the internet started first, the internet, 50% or more of the internet at the start was pornography. So 60% of it was just purely pornography, right? So that is what the internet was. Now it has become much more of a smaller fraction. When it comes to bitcoins or coins or cryptocurrencies, 50 or 60% of it initially was informal funds. People wanted to move funds which are, money laundering or whatever you want to call it, they want to move funds around. So now that it is becoming bigger and bigger, and it has been there for a few years now, it's almost 10 years that it's been there, then other regulators come and this will move towards a formal direction. And when it becomes formalized, you can see big investors, big funds trying to move into bitcoins and crypto because they see that it's moving towards that direction. Then they can understand it better. If you don't understand it, you better be careful, because there are guys who have made $1 million. That's only one they remember. There are guys who had $1 million and became $1, $1,000, overnight. So the best advice for anyone is look at all the negative stories and then invest. Then if you can invest with all hearing the negative, then good.
Thank you, Rachan Tyagaraja. Thank you, Mr. Gajendra. I'm going to go into the next question. These are the final 3 questions we have for the session. We have actually exceeded 8 minutes over the prescribed time. So we'll try and make the pace a little faster for these next 3 questions. Margin trading and other financial derivatives are ways investors in stock coin exchange can profit or lose significantly. Can you explain what derivatives are and how investors can use them to increase profits or even lose their house? We'll start off the responses with Rotarian Tyagaraja.
Maybe I'll invite Reynald to start.
Okay, Mr. Reynald.
So just to give some light onto this, I think it's two different aspects which we need to deal with separately. On one hand, you have margin trading, which in very simple terms is borrowing from a bank in order to invest further in the stock market. Now, this, I think Mr. Yagaraja mentioned this very early on in his discussion. This is something that also comes with a considerable amount of risk, because fundamentally the money that you are investing is not yours. So therefore, unless you are basically absolutely certain of making a return, you can be in a position where you're forced to pay that back, and at a position where you'll be forced to sell your share even at a time where you don't want to. And the way that happens is because you do borrow from a certain period from a bank, the way the regulation works is such that, again, if it does well, you're all good. But if your portfolio falls below a certain limit, they do have the right to, in fact, go directly and sell your shares. So that is a point where an investor can be almost in a helpless position. Now, there are multiple ways.
Sorry, I think the first right is they would normally ask for a top-up initially. If you don't top up, then they will run the risk of actually executing. Yeah, sorry.
Sorry, that was a good point actually mentioned there, which is where initially you do have the option of actually bringing that fresh amount of cash in order to settle it. But failing which, that is the fallback policy that people are faced with sometimes. Now, once again, this risk especially happens when people tend to invest all of their funds into just one type of investment and then look to borrow on that as well. But ideally, if you want to be a smart investor, what you need to do is to also keep your funds in different sources and not go all into one particular thing at any particular point in time. Because what you need to investment, no matter what it is, comes with a fair amount of risk. Now, the next point you did mention about was in terms of derivatives. Now, right now, the Colombo Stock Exchange does not, actually, Sri Lanka does not have a framework in order to trade such financial instruments. But these are things that are very common in most Western countries. The fundamental basis of how this is formed is that you get into a contract with another party, estimating what the future value of that particular contract would be. And then subsequently it breaks up into multiple sub avenues as to how these can be structured. But it's fundamentally taking a bet on when one person believes that, say, a certain price of something would be higher and another person believes it would be lower, you agree on a price on a future date, and based on that you trade. So yes, I think would the rest other panelists also have something to share on this?
The main thing is to realize that you have two types. One is you have a regulated exchange where you actually have what we call exchange traded derivatives, where there is more certainty and more knowledge. And then on the other hand, you have what you call OTC derivatives, which are what you call over the counter, where it is written between one party and the other. So one needs to be also aware of the two options available.
Thank you, speakers. We have a question put forward to us from an audience member. Let me read it out for you. What is all the buzz in the investment sphere about the port city? What potentials does it hold from an investment perspective? This is open to all of you, but I'm hoping Rotaract Tyagaraja will be the first one.
So I'll take it, right? I'm not going to comment on the burning issue which has plagued all of us for the past few weeks, this question about sovereignty, right? That's why we went into courts and then we went into parliament, and hopefully that has been resolved now, right? But I'm only looking at it from the perspective of an economic zone and what this can do. Center to the economic zone is a financial city, and if I'm not mistaken, it is built on a hybrid of various other cities which are prevalent in the world. Probably the closest which we will have when that comes up is what is currently happening in Dubai, DIFC, where we actually have a physical building with a few million square meters and a whole plethora of other infrastructure like Michelin star restaurants, the whole lifestyle thing which goes along with that to attract and retain top quality talent, because you will not have a city, financial city with the right talent if you don't have lifestyle. And that is one thing we need to, that's why Bangalore actually, when Bangalore started as IT city, the city ballooned because of the lifestyle, right? If not young people, especially youth, it's not only about money. And Dubai has done that pretty well. So I think that the whole purpose behind reclaiming, I believe that 269 or 70 hectares, making it a planned city with literally 1/3 of it being green. So then you're also mindful of the environmental and social sustainability issue. God knows what. Hopefully the carbon emissions will be taken care of. And looking at 2/3 make available for mixed residential and commercial development, within which the financial city is supposed to come. So it's not only about a financial city, it is about an entire new reclaimed land, which hopefully will give a quality of lifestyle, not necessarily only to the existing people from old Colombo. It is also because from a positioning point of view, we are trying to position Port City as the flagship in a new development in between Dubai and Qatar in the west and Singapore, MAS in the east, right? So the itself, you have almost 1.5 billion population. Within that, you are trying to make this a jewel, right? So obviously, being a freshly reclaimed thing from the sea, you have your opportunity to, starting from proper zoning, to make sure that you have the commercial side separate from real estate. It's not like having people in, whether it's Fernando Road or what place, suddenly opening offices, no zoning, right? So that part has been taken care of. Hopefully, make sure that, from what I understand, there is a framework already as to what can be built in which part of the plot. So it's plug and play. When you go in there, you will be able to invest, but it will have to be plugging into a properly planned out framework in terms of living quality of living, and then doing business, right? So I think that's a huge opportunity. But the key thing I want to make here, and I have gone on Twitter on this some time ago, this is not Sri Lanka's panacea for economic prosperity for tomorrow. Let us realize this is a 30 to 40-year journey. And I'm going to make one comparison. At the moment I'm in London, I'm talking from London, and I'm going to talk about the Canary Wharf, right? When I returned, having lived and worked here for more than a decade, when I came back in 1992, the Canary Wharf was just starting as a project, right? And where it is today was what I call marshland, marsh on one side, and it was a whole plethora of dilapidated, abandoned warehouses. And if I be honest to you, I'll tell you, I won't be seen alone after 6 o'clock in the evening with the risk of being mugged. That was there. And in terms of an underground, where I live in, central London, the underground stopped 3 stations after me, and to go to, that time I used to work for JP Morgan, right? So to go to where they were planning to relocate, it was like going to Timbuktu for me. But now, that was in 92 when I came back to Sri Lanka, right? So now it's almost 39 years. I've been watching this after the first 10 years. Every year I go up. And if I look at it now, from where I live, where I used to be paranoid that there is no transport, public transport beyond 3 tube stations to go there. Now it takes me 20 minutes from my underground to go there. That's how the underground system has been developed to go in there. And if you look at Canary Wharf today, you will probably need sometimes up to a month to get a reservation in a decent sized restaurant there. Despite COVID, despite it being open, the type of quality, all those warehouses have been converted into sophisticated studio 1-2 bedroom, not 4-5 bedrooms, apartments, state of the art for the young guys who are living and working, not only for people from England, but all over the world who are living in the financial part of Canary Wharf, right? But Canary Wharf alone as a financial city would not have succeeded if it did not have its own little London airport in the middle, and if it did not have a cracking underground system which connected it right there, and this whole plethora of entertainment, open air theaters, bowling alleys, a whole range of restaurants, from a good Indian curry house to a French Michelin star, it's all there. But it didn't happen overnight. It's been almost 40 years. And I think that is the point Sri Lankans have got to understand. It will probably not happen during my lifetime. Some of it might be during Jito's times. And certainly, hopefully, Ritvika, it will come. Some of it will definitely come during your lifetime. But this is something we have to aspire to. It is for the next generation. And that the sooner Sri Lankans realize that, the less criticism. This is a once and for all opportunity for us. It is up to us to take. That's what I feel.
My opinion, Ritika, I have a couple of seconds to this question. Mr. Tyagaraja said about the UK. There was a prime minister named the Iron Lady, or Margaret Thatcher. She's the one who started this. Then Lee Kuan Yew in Singapore. So Margaret Thatcher was a very capitalistic prime minister. She reduced labor unions, very anti-Sri Lankan socialist republic type of policies, right? So Lee Kuan Yew also stopped those policies. So this port city is our a bridge between going fully capitalistic and still being, Sri Lanka. We look after our people, look after everything. So they are trying to get the best of both worlds. And what we must understand is UK was an island to Europe. Singapore was island to Asia Pacific and China. And Sri Lanka is trying to do for India, Pakistan, Bangladesh, so on. So one of the advantages we have is we have fresh air, which is you have to underestimate it too much, because in Bangalore, you can't breathe some of that air. So you have to be going ahead that the people will value some of these qualities, especially after COVID and when you realize all these things going forward. So we have an opportunity. This all depends on the pace of execution. So if, yes, it's 40 years, but we can't take 10 years to take one decision, right? So, and if they come and rewind and change decisions all the time, then it won't be a port city. It will be one of those warehouses Mr. Tyagaraja was saying on Canary Wharf. That's what it will end up being. So we have to think smart, and it's a good way forward for Sri Lanka.
Actually, Jito is spot on, right? I'm not, again, going to comment politically. I am not in that game. But frankly, for a political regime, typically which has a 5-year tenure, right? To start looking at 30 years is very difficult, because for their own survival, they need to be able to deliver results to take the next 5 years. So really to look 30 years is very difficult. As he said, Lee Kuan Yew had that tenor, a bit of an iron fist as well, where he went on. So did Mahathir. And Maggie, she took on Arthur Scargill directly on the unions, and she had a clear run. That run is important. If not, it's only human beings. You are dealing with human behavior and reality. So that's going to be a challenge.
Thank you, Rotarian Tyagaraja. Thank you, Mr. Gajendran. We had an extremely impressive, informative conversation with all three of you today. Thank you so very much for being with us this evening. It was incredible. I'm sure the viewers who are tuning in live and the viewers who will be watching this recording on Facebook in the coming days will benefit from it greatly. The tradition of ending a panel discussion with the Rotaract Club of Colombo East is leaving us with 1 minute of your wisdom and insight, your vision, if you want to call it that, for the future. What would your piece of advice be to them in this particular conversation that we had today with regard to investment, finance? We'll start with, of course, Rotarian past president, Rajendra Tyagaraja.
Start early, learn to save before you invest. Be literate, read, learn, get advice, but at the end of the day, be able to make your own decisions. You need to be in, as they say, be in control of your own happiness before you do anything else. Look at what your neighbor has done, but don't role model after him. Do what suits you. No two fingers are right. And essentially, there has to be some element of long term, even though you may be in your 20s and you want to look at, okay, that $1 million coming tomorrow. Also think of what you want to be when you're 40 or 50. And also in that space, keep something for a rainy day. Because however young you might be, you're physically fit today, you're doing everything, but one never knows. This pandemic has taught us no one is immune. One never knows when you may be struck by health or somebody you love closely will be struck, where you need ready cash. So have one part of it which is readily or reasonably quickly realizable over and above what else you do. And that's something which is very important. As long as you have those few things in the back of your mind and you take control of your own decisions, get on with it. Even if you make 1 or 2 mistakes in the process.
Thank you, Rotarian past president. Mr. Gajendran, your parting words with our youth.
Yes, so here Mr. Tyagaraja ended with health. And health, there is a famous saying that health is a crown on a healthy person's head that only a sick person can see. So if there is illness, everything else changes, right? So you have to have that perspective with anything. But when you're younger, one of the advices I would give everyone is just go for it. That means you try your businesses, try starting up. There's nothing wrong with talking to two friends and trying to sell some clothing item or small restaurant or something that you want to do, which you're passionate about. Go for it. Be sensible about it, but go for it. That it makes a big difference, because when you're 35 or 40 years and you have less time and more money, then you have the ability to gauge what are good businesses and not. Because if you don't try early, when you're 35, 40, 45, you don't know what is good. So you have to go work, figure things out and learn. Now there's social media, as Mr. Tyagaraja was saying, YouTube channels are there. You could learn from a sport to a dance to anything much faster now than you could have done 15, 20 years, 30 years ago. Now information is there. Your choice is to select which one is right. Go for it.
Thank you, Mr. Gajendran. Mr. Ranal Vikramratna, your parting words with us.
I think like both panelists said, one thing for sure is, especially for younger investors, do not be afraid, because this is a very normal part of life. Managing finances, managing investments is something that you would have to come to eventually. So it's always better to have that running start at a young age. And that being said, it's also really important to always be out there and to be reading about the market, because even sometimes what we say today, a good 5 years down the line, can change so much based on new policies and new changes that really come in. It has happened in the past and it's going to happen again. Change is bound to happen. And with that, always being ahead of the market and being in line with those changes is one thing I feel is really important.
Thank you, Mr. Vikramratna. Dear viewers, the conversation towards the end was leading towards economic policy and politics. I wish we had more time to talk about that, but no, we have to, as all good things must come to an end, so must this. Thank you so very much, dear speakers, for sharing your intellect with us and enlightening the youth about these things. I'm sure a lot of people will benefit from this. I want to put it out there once again, great job to the organizers, the Rotaract Club of Colombo East and the Interact Club of St. Peter's College. Thank you so very much for picking this sort of informative topic, which is not something that is quite frequented amongst our youth community. So thank you, and thank you all of you for joining with us. And good night to everyone.
Thank you.
Take
See
care.
you. Take care.